Good morning, guys. Welcome to this Friday, October 10th. Thank God it's Friday, right? Need a weekend now. So, before I start, remember on the Monday we got the Columbus Day. As far as I can see, there is no there's no closure on the futures markets. I know like I thought it was a bank holiday still, but I didn't see anything on the CME website on the Columbus Day on any closures or anything like that. So I guess the futures markets are open as normal on Monday. For today's trading, though, we're still in a shutdown. We're not getting any news, so it hasn't been a whole lot of news to drive this week anyway. Uh, but it's we are kind of holding in this range, right above the 67.30 to 40, below that 68.10, and we are pretty much in the range right now. So I would just start off range bound. This was yesterday's trading. They made a new high and then they backed off. And we may be grinding higher like this, but I would just call this a range bound market. They're probing the edges is what's happening, and see what's going to happen. See if they can take out an edge. But unless in absence of news or anything going on like that, it's going to be hard to reprice the market. I think the more natural reaction would be a profit taking or someone that start taking money off the table if uncertainty keeps going on any further. The natural reaction would be more to the downside, I think. So far, I've been uh, pleasantly proven wrong, I guess. The market is holding on and trying to push to the upside. Now we do have earnings coming out. The next couple of weeks, we're going to start getting earnings reports, and that's going to start setting that the next earnings season is going to be upon us. So at this point, we're going to start off range bound. Look to fade the edges back to the mean. We have the 67.30s on the lower end. We have the 68.15s on the upper end, and we're just going to trade that as a range. So I'm going to be looking at selling strength, 67.90s, 68.05, 68.15s. I'm going to be looking to buy against 67.80s, 75s, 60s. 50s, 40s, and 30s for rotations back up. So that's pretty straightforward stuff. I mean, we're trading in a range, just fade the edges up to the upper edges. I'd always say sell. They look for selling opportunities on the way up to the upper edge. For buying opportunities on the way to the lower edge, and that's just how we're going to trade it. And then let's see if they get any different kind of dynamic going on here. So there's some stuff going on. I mean, the Middle East situation is not impacting the market in any big way. If anything, it's impacting oil and gold maybe because it's like flight to safety kind of and risk premiums from oil coming down a bit. But we're in the range. Trade it as such or trade it as such, and watch these up in the outer edges if they're going to bust through it. We want to be on the right side of that, but there's no rush. I mean, if they start breaking out the upper edge, let's kind of give it a little bit of room and see that it's actually happening. Same thing on the lower side of things. It start heading lower because running the edges is just that. You're going to be running there. It's going to look like it's breaking out, but then it just absolutely fails. And we want to trade the failure. That is the normal. That's usually what happens. Failure to take out an edge. So looking for shorts against 67.90s, 68.05, 68.15s. Looking to buy weakness, 67.80s, 70s, 75s, 60s, 50s, 40s, 30s for rotations back up again. All right, so there you have it. That's how we get started this Friday. On the bonds and the Nasdaq, the bond market is to the upside here in overnight. So they're slowly grinding higher. They pulled back a little bit in yesterday's trading. They just pretty much were staying in the range. Overnight has been pretty good. They are definitely trading higher. They're back up here. It looks like they're trying to take it out to that upper edge. And that would be on the capital flow side of things, that would be up here at the 118s. So looking for a move up to the 118s at this point. We are right up here against these resistance areas, the 17, 10 to 12 and the 17, 16s. And I think if they take out the 16s, I think we'll stand alongside and see how far they can take it. But I'm going to start off looking for early strength, see if they can take this higher. if we get any weakness, I would look to buy against the 1710s. A bit kind of aggressive because we are there right now, and 1704s. But below that 1704, 2 to 4, the London low, I'm taking off that long bias and going back range bound. So fairly aggressive on taking off that long bias if we can't extend to the upside. But I'm thinking maybe they have a shot at taking out the 16s and ending higher. But to start with, I'm looking for that short opportunity. And if it doesn't materialize, and then we're going to shift our bias and start looking for long opportunities. Yeah, see how far they can take it. Bond market is notoriously kind of difficult. These are 5 minute bars, by the way. So they trade pretty slowly. So they don't move a whole fast. It ticks up and down. When it moves, though, it moves. And they want to be part of it. On the Nasdaq's capital flow, we made a move out of the middle to the upside. So the Nasdaq just freshly move out of the middle to the upside, holding kind of on to it. They pulled back pretty good yesterday, right back up again today. So I'm thinking Nasdaq is in a much better spot to extend to the upside and could potentially drag the ES with it or just keep it where it's at. So that's potential short pressure which would be the natural reaction if things just drag on. It can maybe offset, but if Nasdaq keeps trading higher. So definitely a pretty good move, and it's primarily the AI trade which is driving this to the upside. So I'm going to be trading this from the long side of the market, at least to get started. Looking to buy against the 290s and the 250s. Below 250s, I'm taking off that long bias and going back range bound. So this could be something which can get folded in here to this prior distribution into a bigger distribution. Right now, I'm going to treat it as a move out of the middle and trade it as such, and then see if if that holds on. But if this whole thing doesn't become it can't extend or start building value above this level, these levels, the 250 and the 290s. If they can't hold those two levels, then we're probably going to be back down in that lower range, and this whole thing falls into to the prior distribution. So they're going to buy against 290 and 240 early on, and if that doesn't work out, then back below it, take off the long bias. On the way up, potential short opportunities against the 540s and the 380s. Did I say 340s? I said 540s. I mean 340s and 380s for rotations back down. So 25 340s, 25 380s for rotations back down. And not very aggressive on those two. If they because we are in the move out of the middle, they could certainly be taken out. But those are the two ones to look for potentially short. And thereafter we're back in price discovery. So there you have it. So below the 250s, taking off the long bias, I would still be looking to buy against the 190, the 160s, maybe down to the 100s for rotations up, but not very aggressively if they take out that 240s. So and then once they get down there, you're trading this as a range bound market, then there's no rush. Just to make sure you don't sell into one of these support areas. There could be a potential short if they take out that 250s. Running it down to that 180 level. So that could be a potential short trade right there if they start taking that out. So those are the things I'm looking at right now to get started. Finally, oil and gold. And gold is settling in right now. They had a kind of a wild couple of days, swinging wildly around that 4,000 mark. And right now, it looks like they're settling in. I may have to change my aggregation on these charts to get a little bit more readable. But gold was all the way up here to the 4,080s. Now they're back there. They pulled back all the way down to the 3950s, 60s. And now it looks like they're heading right back to the 4,000. So very much kind of what we thought. I thought it's going to stall here a little bit faster, but that overshooting, that was pretty crazy. So I would expect it to start building value in this range now. I think we have the two edges. We are in stage 3 right now. They cut off the buying, they cut off the selling, and we are back to 4,000. So I would start off range bound around that 4,000 mark. You have to be mindful. Gold is massively volatile. So it's initially I would look for short setups against the 4,008s, 14s, 20s for rotation down. looking to buy against the 4000s, 39.95, 39.85 for rotations up. Outside of that, we may have more of a directional move, but that's kind of what I'm starting at. There is no reason that it can't probe it much outside those edges because it's so volatile. I think the probe may be to the downside primarily, but it being down here in the overnight, all the way down here, and then retrace right back up in the overnight. They did retrace all those single print eights we talked about yesterday. That was an overnight trade. Happened in the London session. So they when they opened up, they ran it up here a little bit to get started. Then they ran it lower, and then the overnight closed those last single prints. But that's always the case when you're having the big single print price rejection like that. There's always going to be an opportunity for a potential retracement to retest those, cover that ground again. Anyway, so gold traded range bound. We're just going to be cautious about it. I think today could be a sloppy sideways kind of a day. Oil pulling back. I think that maybe the risk premium is starting to come off. If this deal develops and this Middle East thing, the deal they're working on, it came together. But if they can hold it together and it keeps going, I think oil prices may be dropping a peg or two, and that would be as the risk premium coming off oil. So I would look to trade that on the short side right now in the short term. So looking to sell strength at 60-70s, 61-10s, 61-60s for rotation down. Above that 61-60s, we are back up here range bound and taking out the short bias at that point. But initially, it's looking for that weakness to see if they can take it lower. This could also be a retest of that lower edge, but given the news we have in the Middle East, I think there may be more fundamentals behind it than just the technical retesting of this lower edge. We'll find out here throughout the day. If they take out these lows, I think that's what's happening. If not, if they stall here, it may be as the shifting a bias and looking for that buying opportunity instead for rotations back up again. But right now, I'm looking for them to see if they're going to take that out and we're going to see more weakness or if support's going to hold. So if they trade up above that 61.60, we're back range bound again. All right, so that's oil and gold. All right, back to the ES and kind of where we left it. So we'll leave it there for now. So we'll wrap it for now. Good trading, guys, and I'll see you back at I'll see you guys back at 11:30 for the next update. Later.